Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, so yesterday, let's look at the markets last night, where they are overnight. Yesterday, the markets went down significantly. The Dow was down more than 650 points, and the Nasdaq had its 10th biggest fall of over 500 points. And let's go into a little bit more detail. Tesla was down 9% yesterday, not because it's bad or it's losing money or it's not profitable, etc. It's purely because there is a run for cover. So you've got Tesla, you've got Google, you've got Salesforce, you've got Apple, you've got Amazon. All of them went down significantly, and the investments went into more secure investments that give you dividends or are recession proof. So look in the macroeconomic picture. As I've said over and over again, what you've got an environment of a recession fear. It's fear of going into recession, whereby you have 2 quarters of negative losses. You've already had one in the States of minus 1.4, and you could get another one this quarter, which officially, if that happens in the States, then the States goes into recession. That is frightening markets. Why? You've got high inflation, which the central banks don't seem able to control. They don't seem able to have enough weapons in their arsenal to fight inflation, because it is a supply-driven inflation factor. So they want to increase interest rates, but by increasing interest rates, that's exactly what's fearing and frightening the financial markets. What's frightening them is that you could have, as a result of rising interest rates, you could have a recession, because the cost of borrowing for companies and individuals and the consumer is going to rise, and therefore that's going to take money out of the economy. In addition, you've also got the $9 trillion balance sheet, which the Fed has stated they're going to deal with, and they're going to start sorting that out. That's also going to pull liquidity out of the market. When you take all of these factors into consideration, then what you've got is you've got a run for cover. So if you take another asset yesterday, which went in line with the Nasdaq, was Bitcoin. I've been calling Bitcoin down to $32,000 for the last 3 to 4 weeks. In fact, all the way when it was $48,000, I said it looks like Bitcoin's going to go down to $32,000, and it's floated all the way down. And yesterday, Bitcoin lost nearly 10% in value to close below $31,000. It closed down yesterday $30,500, something like that. I'm not too sure. I'll have to check into that, but it's definitely down. So my next call for Bitcoin, since it's broken the 32,000 level, is to go all the way down to 20,000, purely on the basis that it is a risk on appetite investment, and therefore presently the atmosphere is risk off, and clients, investors are pulling money out of high risk investments and putting them into those secure investments to see where the market is going. So the day trader needs to be very aware that we're talking in extreme volatile markets, but the trend is down. I keep telling you over and over again, the trend is down. The Dow is likely to fall to around about the 27,000 level, and the S&P to about 3,500, and the Nasdaq all the way down to 10,000. By the end of the year, I expect to see the Nasdaq at 7,000. As regards foreign exchange markets, there is dollar strength. So the dollar is rising on the back of expectations of higher interest rates, but also a flight to safety. The greenback, the US dollar, is seen as a safe haven when there is volatility in the markets. So you're going to have an extra added advantage to the dollar that's going to continue rising over the next few months against a basket of currencies, including some of the smaller minor currencies. You'll see dollar strength. As far as the high-tech sector is concerned, the high-tech sector has pulled all the markets up for the last 10 years. Into the high-tech sector, that's probably going to push markets down over the next few months. You can expect high inflation, high interest rates over the next 2 to 3 years. They are now here to stay, so keep an eye on it. As regards US Treasuries, the US Treasury yesterday went to 3.07 purely because the price rose up on the back of higher demand. and you may see the US Treasury float down to around about 3%. If you're a day trader, then be very, very careful. Look at some swing trades. There may be a small bounce in the market from here. However, unlikely to hold it and likely to go down further. Remember, tomorrow in the US, you've got the CPI, Consumer Price Index. That'll give us a clear indication to where inflation is going in the States. Short term, CPI might come down. Longer term, it's going up. Consumer confidence is low. It's not going to happen. And I think we're going to end up seeing some major redundancies going forward. Take, for example, Uber. Uber has now gone onto the track. They're not recruiting any more employees, and they're going to start tightening their belts and tightening their budget, because they've stated clearly that there is going to be a restriction on cash flow, and as a result of that, they're going to have to manage their budget a lot more carefully. Mayor Walensky, Driving Markets. Have a good day.